Hello, welcome back to WINFXTRADING YouTube channel, the only channel that has been optimized to make you rich trading the Forex synthetic market. If this is your first time of visiting my YouTube channel, do your best to subscribe and turn on the bell notification so you get notified this time I upload the new content. Try to like and refer this channel to your network so that YouTube pushes to a higher level of audience. In today's video, I'm going to talk about swings, attacks by actions in Forex synthetic market. Okay. This topic here don't have much document, and you have to watch this video to the very end for you to follow along. I'm going to make sure it's not going to take a lot of time so that you will have more energy to watch this video. Okay, before I continue, if you have been losing a lot of money trading and you know that what you watch on YouTube are just like more like they actually confuse you the more. Okay, this is a solution center. Okay, make sure you subscribe to our VIP channels and you go for our courses. And that's, by the way, let's go and deep into the meaning of this topic, very fast. Take for instance, we have a market that seriously creates an uptrend and then reach some low prices. You know that this turning point here, like this turning point is a controller of this market. It shows that the market is still going down. Also, this turning point is a controller of this market as the market is still going down. Whatever that happened, the price started trading somewhere here and stabilized, that what called stability analysis. If it stabilizes here, there is chances that the market will keep pushing up, or if it break this one and stabilizes there, there's chances that the market will keep pushing up. The same thing happen if market is going up like this. It's going up, it's going up, it's going up. Okay, you know that these spots are the controller of this market. So long market have not violated this turning point, is still going up. But anytime price drop here, there's probability that it will shoot down further. Or if price drop here and stabilizes, there's probability is going down further. Okay, so at this spot, swings attacks is when market is going, like when market is flowing in a given trend, or whether the market is ranging, okay, like it's either ranging or going in a given trend direction, and suddenly price came and start attacking a particular turning point by breaking it. That is what I mean by swing attacks. Okay, because by right, if market is going up, for instance, is not supposed to come and tamper with a previous turning point. That is idealistic model of price movement. Is not supposed to do like that idealistically, but in practical sense it does do like that, and 80 to 95% of time it leads to change of trend. That's what I'm trying to say. It leads to change of trend. Okay, so if it pulls back, it will stop somewhere and continue going up. It's not supposed to come and attack this turning point. That's what I'm trying to say here. Okay, just like here, it respected this turning point and continue going up. That is idealistic behavior of price movement, and this happens maybe 5% of time. But in most cases, which is about 95 to 99% of time, if such happen and price started attacking a swing, the swing, if price started attacking a swing, there is tendency that the trend will automatically change. Okay, so I'll show you some instances on the chart. Right now, this is I'll be on the 4-hour time frame, and this is volatility 51s. Okay, you see, what I'm teaching is beyond traditional technical analysis. These are sophisticated and metaphysical ideas that if you don't know it, whether you're a newbie or a professional, you'll be losing money. You might be making profit at a certain point, but it's waiting for you. Like, that's why you see some people, they make profit for straight 1 month or straight 5 months, maybe 2 years, 3 years. They find it difficult to keep making the same profit, and they will be like, you know, like they basically find it difficult until they actually, maybe either they deploy higher level of risk management or they give up. Okay, they give up due to so many losses. And if you don't understand this, you are going to face a lot of these problems. Now, if you look at this market, what you need to do is not all about drawing trend line. What you need to do is to understand the swing and how market or price is attacking the swings. So draw as many swing as much swing as you can, and extend it to the future, extend it to the right. The right there is the future, right? Keep drawing this, and extending it to the what? Future. Okay, keep drawing the swing. So the swing will be based on the turning point and the wicks associated with those turning points. Use it to draw the swing. Okay, so we have a swing here. A swing is a swing whether it is at a low price or at a high price. Once price break it, or it turns, like make price to rotate, like turn to another direction, is a swing. Okay, now after I've mapped all the swing, I will delete the irrelevant ones. So I'm going to delete this. Why am I deleting it? I just read them simply to understand the price movements. Now, right now, I'm going to delete it because I don't want it. It doesn't, like, what I need is just one particular turning point, which is this one. Why I'm interested in this one is that this represents a previous low price. This represents a previous low price, and then what you notice is price traded above it. Price break it and traded above it, and then now you need to study the turning point reactions. So price traded above and return back, because by fact a single movement doesn't change price direction, and market have to complete cycle. So we have an impulse here, so this is a retracement, so it will create another impulse. But what we don't know is whether this new impulse is going to break a turning point or not. So look at what happened. The market came here and saturate, and then go up and take out this high. It took out this high. So I'm both running action analysis and swing attack analysis. Okay, in as much as I'm trying to understand the action that is coming to this market and their differentials, like you analyze actions and you also analyze previous actions. Especially when you see differences between actions, it's actually going to help you to make more profits, right? Yes, because you will now know what you are holding. So I will not be trading something not knowing that what you are trading is the opposite of what you're supposed to have traded. So you see, immediately it take out this high, and the fact that this one supposed to take out this low, but it fails. So the market created a higher low and a higher high. So this is called a swing attack, because an action, which is a buy action, came into the market and attacked a previous going sell action. And so what do? You should stop selling. And you think that what I'm saying is not making sense, because I know a lot of traders will come and visualize this order block and say they are going to sell because of this order block, and so immediately market tap here, they will sell. That doesn't make sense, because even if you see this geometry, it doesn't mean it will happen all time. So what the market did is that they took you out and hit your stop loss, and ever since then price has been trading above your entry, and then you'll be losing as much money as you can, because you will be like, oh, I have lost $1,000, so I'm going to position somewhere here, because at least if you break here, it's going to drop. So you position, basically you might have positioned somewhere here, you put another, let's say $3,000, the market went up and you lose. Or you will be like, oh, it's not selling, let me sell. You put a sell here, you put another, let's say $10,000, the market went and hit your stop loss and you lose. At this junction, I'm going to tell you the secret of success. If you have been losing money trying to prove yourself right, and you keep losing, make sure you subscribe to our VIP channels and make sure you enroll for our mentorship and courses for you to stop this thing, because we have the key. We know this thing very well, right? So swing attack is very, very important. Once you understand swing attack, you will not trade against the attack. You have to follow the attack. The attack happens so that the market will change direction. I'm going to be ending this video, but before I end it, I want to show you something. Why is it that somebody that is buying this market will be losing money right now? Look at what happened here. Now what you should have understood is your entry matters a lot. So if you are entering market, you want to enter at a price where drawdown will not take you out. So we have a price movement, because you at least need 2 turning points to create some actions. So the buy action was restricted above this trend line, and suddenly the market start making lower highs. This is a sell action taking place inside a buy action. Now immediately it break out, it traded below this trend line and push back. You can initiate a sell, put your stop loss above about a completed swing like here. Monitor the price behavior at this trend line. Once it break it, you are going to hold this trend long. And you see, that is a swing attack. How? The market was making higher high. It break this spot. We extend to the right, which is the future. Okay, and it created a support here. So when it was coming down in the future, it actually break out of this spot, pull back to it, and then that is an attack. So these are these are some of the stuffs you have to know. Okay, thank you. Make sure you keep coming and proactive with us. Leverage our efforts, copy and paste our trading real time, so we make massive profit. You also make. Thank you and bye for now.